Our technical update from the LMAX Exchange Research and Analytics Desk for Monday, June 15th, 2015. Euro dollar. So right now we're waiting for a break on either side of resistance or support in the euro for clearer directional insights. Key levels to watch above and below come in at 114.67 above. That's the high that we saw on the 15th of May, and 108.19 below. That's the low that we saw back on the 27th of May. At this point, until we see a break on either side, the market is locked within a choppy consolidation with no clear directional insights. A break above 14.67 would take the immediate pressure off the downside and open the door for a more significant correction in the euro up towards the 120 area, while inability to take out 14.67 followed by a break back below 108.19 would open the door for a resumption of declines back down towards a retest of the 12-year lows from earlier this year in March at 104.62. Sterling dollar. So cable has rallied up in recent trade off those recent 150-170 lows going back to the 1st of June, with the market stalling out above 155 and just a shy of 156. There is some good internal resistance in the 155.50 area despite the minor break that we saw on Friday, and the market will need to close above the high that we saw back on Friday just shy of 156 to open the door for fresh upside and a potential retest of the 158.15 2015 high that we saw back on the 14th of May. Inability to close above that high that we saw on Friday, followed by a break lower, will put the pressure back on the downside for a resumption of declines back towards that 51.70 low going back to the 1st of June. Dollar yen. So dollar yen is in the process of a correction off those recent multi-year highs that we saw at 125.85 going back to the 5th of June, and that we could see still deeper setbacks towards previous resistance now turn support in the form of that breakout around the 122 area. At this point, the constructive outlook remains firmly intact, and any setback should be very well supported in the 122 area ahead of a bullish resumption back above 125.85 and towards eventually 130 further up. Euro Swiss. So Euro Swiss setbacks continue to be very well supported above 104, and the market looks poised for fresh upside in the sessions ahead beyond recent highs that we saw at 105.75 and towards the 108.15 February peak further up. At this point, only a daily close below 104 would delay the outlook, while ultimately only back below the low that we saw earlier in April at 102.35 would negate. Aussie dollar. Aussie dollar remains locked within a well-defined downtrend, though the market has been consolidating off recent multi-year and yearly lows at 75.33 in recent trade. But any rally should continue to be very well capped ahead of 80, with 78.19 now coming in the form of initial resistance. At this point, look for a break lower back towards and below the recent multi-year low at 75.33 to open a fresh downside extension towards the 70 barrier further down. Dollar CAD. So dollar CAD's recent setbacks have been supported after the market triggered a double top, and the market looks like it wants to put in a higher low around 122 ahead of the next major upside extension beyond recent highs, which come in around the 125.60 area, and that will open the door for a fresh upside towards a retest of the yearly high at 128.35 further up. At this point, only a daily close black below 122 would delay the outlook. Kiwi dollar. So Kiwi continues to extend declines to fresh multi-month, multi-year lows below 70, and the market has traded down to as low as 69.42 thus far. At this point, any rally should be very well capped below recent resistance at 72.32, with fresh downside exposed towards the 65 area over the coming days and weeks. SPX 500. The S&P 500 looks like it's in the process of carving a major top since establishing fresh record highs back in mid-May at 2137. At this point, next key resistance comes in the form of the low that we saw at 2040 going back to mid-March, and a break below this level will confirm and open the door for a further acceleration of declines. Gold. So gold looks like it's in the process of establishing a longer-term base off lows that we saw in 2014 at 1131. At this point, the market, while it holds above 1170 on a close basis, strengthens this outlook and opens the door for a retest back above recent resistance at 1232. A break above 1232 will accelerate gains and open the door for fresh upside back above 1300. Really, only a close back below 1170 would give reason for concern and expose a retest of that 2014 base at 1131.